U.S. markets is driving some investors to foreign currency. Joining us again from Atlanta with some tips on trading in foreign money is Wayne McDonald. He's chief currency coach at Forex's FX Bootcamp. Wayne, good to see you. Thanks for coming back. Last time we kind of shortchanged you, so we're glad you could make it back. Basically, details of what the bootcamp is all about first.
Well, first of all, FX Bootcamp is an organization that teaches people how to trade currencies. But what makes FX Bootcamp unique is that we teach people live while the market is moving. So, sure, we teach you technical and fundamental analysis, but most importantly, we teach you how to be a trader by holding your hand perhaps as much as 12 hours a day and explaining what's happening in real time, helping you set up your trades pip by pip, candle by candle.
You know, I was a little bit skeptical at first, but the more I looked into it, because it's such a volatile market, there's nothing more volatile than currency. It's where a lot of the real high rollers are. But you are very conservative in currency trading, putting in stop-loss orders every chance you get, right?
That is absolutely correct. You know, Forex is very, very risky, but, you know, honestly, whether you're trading in commodities or equities or in currencies, risk is always going to be inherent. And what you do to manage that risk is roll up your sleeves and do the hard work. So, for example, let's say someone wanted to pick a stock. Well, it's well known that you need to research the company's product and service. You need to get to know the management team, and you have to have a reasonable comfort that the company is going to produce profits in the near future. And if you're right, hopefully you make money. But sometimes, even when your analysis is right, you still lose. But you know, Forex is not that different. Right. You still need to gather your intelligence, and you need to formulate a strategy. Okay. Most importantly, you need to have the discipline to carry out that
Wayne,
plan.
One thing, lest people think that it's unexciting, you do rolling stops, right? You train people in how to do rolling stops. Oh. Explain what that is, because this is where some real fast action happens.
You're right. Currencies can move up and down minute by minute, especially with news. You know, ISM really moved the market, and non-farm payrolls coming up will move the market. When you place a trade, what you do is you put a stop loss that's not that far away, so you know that if you are wrong, and any variable around the world can make you wrong, that your potential loss really shouldn't be that big of a deal.
But we're talking, in terms of trades and time, we're talking about a 5-minute turnaround here. If you put it down with a stop loss on it, 5 minutes later, you made 10 basis points, whatever it is, and immediately you turned it around because of that stop loss. So these are quick trades.
Sometimes that's true, and when news comes out like ISM today, I held a trade for about 17 minutes, so that's not that big of a deal. But the beauty about Forex is that it trends so well. So, for example, the best place to put your money right now anywhere in the world is in the U.S. dollar, and that U.S. dollar has been strong for 8 or 9 months. So you don't have to trade every single minute or every single hour.
Wayne McDonald.
Go with the long-term trend.
It's very exciting, but there are ways to play it safe as well. It's great stuff. Thank you, Wayne. Good to have you back. Appreciate it. Well, searching for the answer to business success.